For the first time in this country, a credit union was put into liquidation yesterday by the High Court. The central bank sought the liquidation of Bearhaven Credit Union to avoid the risk of a disorderly collapse. All savers in the institution will get their money back, while borrowers will repay their loans to the liquidators on existing terms. But the sudden liquidation has raised questions about the stability of the credit union sector in general. In a moment, we'll hear from the woman in charge of supervising the sector. But first, this report from Mark Coughlin.
And this evening, Newsround looks at the growth of the credit union movement and its effect now on the lives of 1 million people. Thank you. Good night.
A movement that has been central to Irish society for decades hit a big bump in the road yesterday. A little credit union in Bearhaven in Cork found itself in the High Court. The central bank was seeking its liquidation.
This is the first time they've actually done that, requested that a credit union be liquidated. In the past, Newbridge Credit Union was transferred in, its accounts were transferred into Permanent TSB, and you had a smaller credit union in North County Dublin which was merged following application to the High Court. So this is quite a dramatic move, and it's scared a lot of people about the kind of strength or weakness of the movement.
Credit unions started as small-scale local community organisations.
I think this is a fairly straightforward loan. He has about £380 in shares, and he only wants to borrow 300.
Yeah, that looks quite novel, yeah.
But many don't fit such a description anymore.
Crazily, a lot of credit unions got carried away during the boom and thought, oh, this property lending is a good way to make money, let's get involved in that, we'll give our members loans to buy properties. And it's all gone wrong. I mean, much of this is what happened with the banks, only it's on a smaller scale. So this is why we're seeing now problems with credit unions, and it's going to slowly work itself out. But this is the most severe instance of a credit union getting into trouble that we've seen.
The Bearhaven of today is some distance from the cautious ways of the credit union in Ennis in 1975.
The present state of the personal loans for the past month is £145,000, and the shares are £162,000, which leaves us in a very solvent position.
There were particular problems in Bearhaven. It's lending, a lot of property-related lending, a lot of it's gone sour. There were internal governance issues. There were paper-based accounts and ledgers being kept, and there was a lot of loans being made to what are called connected parties.
The central bank has assured members of Bearhaven Credit Union that their savings are safe. Deposits up to €100,000 in all credit unions are guaranteed by the state. They're also keeping a close watch on other credit unions and encouraging some to merge to strengthen their financial position. But this is not the first credit union to find itself in difficulty, and it's unlikely to be the last.
This whole situation has been a disaster all round, really. I mean, it's been a failure by the credit union itself in Bearhaven. It's a failure by the central bank, and it's been a failure by the League of Credit Unions, which is the representative body for credit unions, because it should never have come to the situation where a credit union has been forcibly wound up by the High Court. So, you know, naturally people are going to worry, but the central bank assures us that they're managing the situation and that there'll be the exception rather than the rule, that they will close down more credit unions.
Mark Coughlin reporting. So why did the central bank take the action that it did? And could other credit unions suffer a similar fate? There are some of the questions I put to the Director of Credit Institutions with the Central Bank, Sharon Donnelly, when I spoke to her earlier today. Sharon Donnelly, this is the first time that a credit union in trouble has been wound up. Quite an extreme move. Why did you do it?
So, correct, it's the first time a credit union has been wound up, and I suppose that demonstrates that this really was a last resort in this case in relation to liquidation. So there have been concerns about the credit union for a number of years, and we've been working with them to try and address those concerns, and unfortunately there hasn't been a solution to those concerns. So, as I said, liquidation is a last resort, and that unfortunately is the situation we found ourselves in this case.
There was talk about perhaps merging it with another neighbouring credit union that would at least have kept the service for the people in the community.
Yeah, so there were a couple of attempts at that. that. Some of those were voluntary attempts where another credit union was looking at merging, and they would have had support from the credit union representative body, the ILCU, but unfortunately that did not conclude. And after that, once we began to look at a resolution in this case from a central bank point of view, we did look at another transfer where we go through basically a process of asking a number of credit unions if they're interested. And unfortunately that process did end in us getting a bid, but that was a very expensive bid. So while it's unfortunate in this case, liquidation was a cheaper option from a taxpayer and public interest point of view. The hope we would have is that another credit union will be interested in providing a service there, and we're very open to discussing with any other credit unions that option of them moving in there, hopefully quite quickly, to open up maybe a sub-office or another office of their own credit union.
A lot of people, though, might look at it and say the state has poured billions into Anglo, billions into AIB, and yet couldn't find the money to save what is an essential community service.
So I think since the crisis, there's been a recognition, obviously, that the banks were assisted in that way, and that's of great concern to people. And the whole approach to resolution and so on is changing in order to try and ensure that the expenditure by taxpayers is minimised for resolution cases. So in this case, one of our jobs is to look at the cost of the resolution and to decide whether taxpayers' money should be spent or not. And as I said, in this case, while very unfortunate for the members of Bearhaven Credit Union, a liquidation was a cheaper option.
And what exactly went wrong with Bearhaven Credit Union?
The problems in Bearhaven Credit Union unfortunately stem back over a number of years, and they relate to a mixture of problems to do with poor lending practices and some concerns about governance and lack of internal controls and so on. And those problems persisted over a long period of the last number of years. So I suppose from our point of view, we've given the credit union a lot of opportunities to try and address those concerns. We have to make sure that those concerns are being dealt with, and we have imposed a number of restrictions and directions and so on the credit union to allay some of our concerns. But we reached a final point where, as I said, this voluntary process that had been under discussion for some time clearly wasn't going ahead, and the uncertainty and difficulties couldn't be allowed to persist. I think we were obviously concerned that ultimately the credit union might collapse in a disorderly fashion.
In a statement, Bearhaven Credit Union said that because of the restrictions that were imposed on it, it wasn't able to lend very much money, and therefore it had its hands tied behind its back. Now, I saw a quote from you somewhere saying that about half the credit unions in the country have restrictions imposed upon them. So are they going to be in similar situations where they're not going to be able to generate the income to pay dividends to their members?
In many credit unions, the lending restriction might be of the order of 10 or 20,000 euro, significantly lower in Bearhaven because our concerns were so extreme in that case. So I would certainly acknowledge that there was a fairly strict lending restriction in place. But I suppose our concern is, in a credit union, it's the members' money that the credit union has taken in and that they're lending. So if they're lending it out in a manner that isn't really very robust, or where they're not really checking who they're lending it to, then we obviously have to try and deal with that, and that's why the restrictions are put in place.
There are obviously a lot of people in this country are members of credit unions, have savings in credit unions, and they will be worried because of the Bearhaven example that perhaps there might be a problem with their own credit union. You have about 100, I think, on your watch list here in the central bank. How much concern should people have about those credit unions?
So I said earlier liquidation was a last resort, so I would absolutely emphasise that that's the case. And the other thing I would say is that people can obviously take comfort from the deposit guarantee scheme, and eligible depositors are covered up to €100,000. I think people probably know that in terms of the scheme. I would also say that while we have that watch list, the issues vary widely. So there are some credit unions where maybe our concerns are about the fact that they have particularly high arrears at the moment and they need to do some work to deal with those. Or they might have a particular issue with governance where they need some changes on their board and so on. So we calibrate our supervisory response according to how serious the concerns are.
And would you be worried about any other credit unions, any other individual credit unions having to go the same way?
Well, I think certainly there is an acknowledgement in the Commission on Credit Unions and in recent work through the establishment of the Statutory Restructuring Board, REBO, that the credit union sector needs some changes and needs some consolidation. But as I said, we would see even transfers like those that we undertook in the Newbridge case as a last resort, and every other option is pursued before those would have to take place.
You gave a speech to the Credit Union Managers Association last February, and you said, "I'm surprised and concerned that credit decisions and credit control continue to be issues in large numbers of credit unions we visit," and you then outlined some of the problems. So obviously there are still very serious problems in some credit unions.
I think as a country, Ireland has learned that lending standards is something that needs to be monitored very closely. So we have very high expectations in that area, and where we see concerns or we see bad lending practices, we do step in to have those concerns mitigated. I've spoken a number of times about lending restrictions, and I suppose a key point would be they're put in place until our concerns are addressed. So if credit unions unions engage with us and work with us to alleviate our concerns, then obviously those restrictions are removed. And concerns, what does that mean? Well, they tend to be about things like, for example, not assessing creditworthiness or not assessing whether you're lending someone too much and whether they can actually afford to pay it back.
Okay, so the basic point is you're happy that most credit union members, there isn't going to be a problem?
Yeah, and it's certainly something that we would keep under review. And in this case, just to assure the members again that the liquidator who's in place now is working very closely with the Central Bank to ensure that people are paid out their money as quickly as possible.
Now, for the last year, a senior counsel appointed by the Attorney General has been examining the case of a man executed for murder over 70 years